Good morning. It's Harvey Jackson from Producer Profit. I'm just going to go through Kyle's report that he puts out every weekend, talking about the Futures Focus report and just all the other news items that I'm seeing here today. So you can see here there's a lot of positions put on by China and some other European countries as well. We'll see a little bit of his article that he wrote up. But what I wanted to get into is just exactly what the positions are. He entered a position back here and had a little bit of a loss. Now we're in a positive position and looking at exit up in this area as well. So just as a FYI, that's what we're looking for on the canola. So entry. So you can see on here just where this is a exit point where he suggests to get out of the market and get out of the market at the top here with a profit. So you can see some of the articles or just the position that's actually getting talked about here right now is long and with an exit down there and a take profit up here. Currently sitting at 32 cents on the position. Crush data came out on Friday and it's running right now at 88.4. Last week was 84.5. So total crush data is just shy of 4 million metric tons right now. And basis has been improving for some of the crushers over in Alberta. We expect to see that happen here too. Belgium, UAE, and Bangladesh pick up some exports, and obviously the Canadian canola still remains quite cheap, and we'll get into the differential from Europe and us as well. So here's a wheat position. We were in a negative for a little wee bit, but now we're in a positive with an exit. Not really high expectations of the market going extremely high here, but it looks like there's only minor moves in this market and I'm trying to capture some of it. So right now we're only up 9 cents on that position with an exit at 6.29 off the March. Palm oil tracking a little bit lower and same tracking other rival vegetable oils. That could be maybe China as a vegetable oil that might be tracking a little bit as well. From Karen Braun, she's put all the grains together and it's just not a hugely net short position. But when we look at the Minneapolis wheat, it's an all-time record short position. Found this article a little bit interesting, and I thought maybe I'll just hit some of the highlighted areas. So Ricketts, which is a senator, says he's talked to Trump, and they're not quite as negative on the biofuels as they are on the EV. And then if you think about who's going to be in his cabinet, of course, Elon Musk in there. But the suggestion is not to have monies going towards EVs, and Elon Musk is not all that crazy about that either, because he can compete without the free money going to the big players in the auto industry. So canola's just basically flat. Rapeseed's up $1. Soybean oil is down a tenth of a penny a pound. Palm oil is down 28 ringgit. And Chinese rapeseed is down, or is actually a little wee bit up. Crude oil is actually a little wee bit up at $68. Your diesel fuel is basically flat. Soybeans actually trading above the $10. Meal is up a little wee bit as well, and the wheats are up by 6 to 5 cents, somewhere in that range. And the Canadian dollar's recovered a little bit from its loss on Friday. So let's just have a look at this. What does this mean? We're just crossed over the 20-day moving average and approaching the 200-day moving average. So that's a positive signal. Slow stochastics is actually positive. And if we look back at or look forward to November 25, this is the target that I'm looking for to add some more sales. So somewhere in that range. And we've had a pretty nice recovery. $177 cheaper than European canola. Still looking at a base of around 100, so it's well supported. It did get up to $200. Rapeseed recovering as well, just kind of stalling out at the 38.2 retracement value. Soybean oil not quite touching the 20-day moving average, but it is above the 200-day and the 10-day. So good signs there, but basically trading flat. I think they're positioning, waiting for the news from USDA tomorrow. Palm oil, a couple of days just basically flat, but hit an all-time high on Friday, or not an all-time high, but a high this crop year. Here's your soybean in China, and this is kind of a mixed area to talk about. Just it's down some from where it was. Crude, definitely getting towards the bottom end of this wedge. Diesel fuel is cheap. Soybeans trading above the $10. So that's a positive signal, but it's very close to the bottom and still looks like it's in a downward trend. Soybean meal created a new low on Friday and looks like it's trying to recover. But when we look at what is the Chinese meal look like, and I had to do some math here because I can't do the math on bar chart, but this 388 is dollars per US dollars per ton. Then convert it to a short ton, it's a $63 difference. Now I might just start keeping track of this a little bit more. Canadian dollar still making some lows with that job numbers that came out, and then recovering today. So wheat breaking through this trend. 3 days up here is a good sign. Now it needs to get above that number there. Let's call it 605, 610 before it can actually be bullish. But if we look at this indicator, it does look like it's got an upward trend on certain wheat. Still looking for the $7 for new crop, and you can see that you're probably breaking this trend as well on your Chicago wheat. Kansas just breaking through today. Milling wheat, choppy, kind of in the sideways move here. Oats does not know anything right now. Corn looks like it's trying to break through this top end of this wedge. We'll see what it does today, going into tomorrow. Having green on some of the U.S. traded commodities. We'll see how it closes today, but it could be a good sign for tomorrow. So tomorrow is your crop production that we'll see coming out from the USDA at 11 o'clock Central. Chat tomorrow.